Welcome to the Senior Podcast Show. My name is Corey Lear. I am your host, and I'm also the Director of Communications with the Senior Companies. This is Season 2. We have so many fun things in store for Season 2, but first of all, we have some very special guests. One wasn't enough. We had to bring in two. So welcome to...
Yeah, thank you.
Yeah. Welcome to Jim and Matt. I'm so glad to have you guys here. So Jim and Matt are the co-owners of 3D Advisors, Inc.
That's correct.
Yeah. So that doesn't help our client.
Definitely does.
We're going to need a little bit of an explanation here, but you guys have been around since 2011. And you have been providing advice to agents as well as clients for many years before that as well.
Yes, yeah.
So who wants to sort of take over and give our audience a little bit of insight into what 3D Advisors, Inc. actually is and how you can help?
Jim can take that one. He's so very eloquent when it comes to things like this. So
thank you, Matt.
Yeah, you're welcome, my friend.
So 3D Advisors is a agency, a general agency that works specifically with financial advisors and insurance agents throughout the country. And we work with them on their clients' long-term care insurance needs, their life insurance needs, and financial planning needs. So that's pretty much what we do, right?
Yeah, in a nutshell. And you know, there's such a broad umbrella that you can kind of put over this.
I was just going to say that. You say in a nutshell, but those are some big,
yeah,
those are some
definitely.
big things.
So each one of those particular product lines that we actually offer can cover so many things, including, you know, conceptual. You know, we do a lot of education when it comes to our clients, which are the advisors out there. So we do a ton of education, and it's all based on what concepts. We're never driving products, anything like that. So we really believe that in the industry, it's something that has kind of gone away over the years. There used to be some great education stories when it came to some of the captive markets that were out there, a lot of the New York Lifes and so on and so forth. Nowadays, relying on this type of channel, Jim and Chuck and I and our team, which, by the way, is a fantastic team, so I'm going to give them a little shout out. Well done, 3D Advisors. One of the best teams in the industry, and we are on the phones constantly, I mean, all day long, talking about these types of products. So whether it's life insurance or long-term care, disability insurance, what those things can be used for coverage on a business owner, on an individual with a family, on a single individual, on kids, you know, and especially what we're talking about here, you know, that elder age group as well. So
It's definitely never too soon.
No.
And I think a common misconception a lot of the time when it comes to insurances or financial advice, people always think that they need to have a lot, that you need to be rich or you need to be wealthy to have those types of conversations, and that's just not true.
That's a huge misconception, absolutely.
Yeah, I agree. I think even sometimes advisors feel that their clients, you know, might need to have a little bit more insurance, and maybe the consumer, the client, you know, doesn't understand the need for the insurance, right? So whether it's long-term care or life insurance or whatever it may be, but really what we're trying to do is we're offering protection-based products, right? So protecting that nest egg, protecting their retirement accounts, and we do that with these types of products.
It's so important to really think about the sooner the better.
Yeah, and one thing too that people, you see the stats, the age wave. You see those stats all the time. So people tend to kind of laser focus on it, right? About, you know, how many individuals from that baby boomer generation, how many individuals are turning 65 every single day, and you know, I'm not going to quote anything, but
I will.
Okay,
I'll do it. Yeah. So it's the number that we hear is it's 10,000 baby boomers turning 65 every single day, and I think we're halfway through that. So I think we have 10 or 11 more years left, right? So the market is huge, and that tells us that there's a lot more planning that needs to be done, and a lot more conversations that need to be had. So there's a lot more education that we need to bring to the field, and we'll continually do that. That's that's been a mission of ours for the past 10 years already. So
yeah.
That's incredible.
It is one thing that a lot of people contact us and say, you know what, this is something that nobody else is doing currently. This is something that people are just really, you know, pushing product, et cetera. When we started our company back in 2011, one of the main things that Jim and Chuck and I spoke about was we want to do this for the right reason. We want to make sure that people don't get the wrong idea when it comes to these types of products. We want to make sure that our business is moral and on the level. And that was one thing that from the day we started in our own houses, in our basements with one laptop computer, you know what I mean? I was reading something today about all the businesses that started either in a shed or a garage.
Yeah.
You know, and it's Apple and Harley Davidson was in a shed and so on and so forth. So I always kind of smile and chuckle when I think about that. When we really did start our business, it was a small business right inside of our own homes, and all the glory that it is now. But it really drives me back to that part. Hey, we're doing this for the right reason. That's why we're focused on the education.
And that's why you've been able to grow from your basement.
Yep, absolutely.
Which is a good thing.
Well, I like my basement though too. I do. I don't mind.
You guys have some nicer color now that you've been out of the basement for a little bit.
Yeah, that's true.
Not so pasty as everything.
Exactly. Yeah. So we are here to talk about life insurance and long-term care insurance. And I was doing a little bit of research, and I was searching your site, and you had a piece on there, a page on there called The Facts of Life, which I thought were very interesting. And it said, one of the facts on there, it said that today 70% of adults agree that they personally feel they need life insurance, yet only 63% have it. Why do you think that is? They just put it off?
I think a lot of times people do put it off, right? Because maybe they haven't spoken to an advisor, or maybe they think it's too expensive, and so they don't even look into it, right? I think once they start asking those questions, they start looking into it, they realize that it is affordable and that they could afford a policy.
Anything.
Yeah, just even a little bit, right? So something's better than nothing.
Final expense, perhaps.
Yeah, exactly.
Yeah, and technology the way it is today is there is so much material out there on the interwebs, right? There's so much material available for people to go check on. And there are a lot of companies that are really backed by that technology now. There's companies that we've just picked up that solely they created the technology platform and then backed it up with the insurance side. So technology is a big part of what we do. And I think over the last 5 years, we were just talking about this on the way over the last 5 years, huge steps, leaps and bounds when it comes to technology in our industry. And now that all that information is available, I think that number should be changing. At least we're fighting for it every day for it to change.
Yeah, because now if you have a question, you can Google it and at least have a basis of questions to go ask you guys, right? Yeah, exactly. And some idea of where to even start.
Yeah.
So I wondered, I don't know, in your experience, do you feel like maybe some people haven't come forward because they don't know as much as they should, and so they're a little nervous about asking you guys questions, like intimidated, maybe?
There's a little bit of that. I think from the consumer side, I think there's a big intimidation. I think from the advisor side, there's that need and want to not disappoint their clients. They don't want to disappoint their clients, so they don't maybe want to have some difficult conversations with them about their health or things,
delicate.
Very delicate, sensitive information, and those are hard questions to ask.
And they are, but the industry is getting better about that situation, right? So the advisor doesn't necessarily have to ask those questions like they used to.
Right.
So they are setting up a different approach for that system, which makes it a little easier.
That would be great.
Yeah.
That would be really great. Yep. Another fact I found on there that said 37% ages 64 or younger. I'm reading it wrong. It said of those in need of long-term care, 64% or 30. Oh my goodness gracious! This is where we would need to cut it right here. This is where, because I can't read today. I try not to wear my glasses on. Listen,
it kind of goes with that stat above it.
It does,
so of
but
those
it says
in need of long-term
care, 37% are 64 or younger. Why do you guys feel those numbers are so low?
Well, Jim, I mean, on the long-term care side, the need is greater than. So when these insurance companies first came out, they had their actuaries try to think about what the cost would be, and they were selling this straight long-term care type of product.
Okay.
And then come to find out, they were really wrong.
They may have been what we call priced wrong.
Yeah.
And to go into detail on that is a lengthy conversation. But a lot of people have had maybe there's some misconceptions or misunderstandings about those traditional long-term care products. And so today, I can count on one hand how many traditional long-term care policies we actually, clear through our office, and it's dwindling down. So we're seeing a lot more of the life insurance with the long-term care riders, and we're seeing more and more of what we call the linked benefit products. And even some annuities with long-term care riders, right? So those are the more attractive products, and that's where the market and the industry is going, is in that direction.
That's interesting.
Yeah. So
it offers a little more protection for the clients too on those older policies. What the individuals were seeing, the insureds were seeing, was a lot of price increase, a lot of hikes on their premium. These products now that are available have that inner protection, so they don't get that increase, even if the numbers were wrong in the beginning. It's basically like a locked-in type of thing.
Do you feel that maybe those numbers were being increased because people are living longer?
People are living longer.
Obviously, inflation.
Well, people are
mention.
living longer and claims experience. So it kind of worked like car insurance, right? So as the claims experience went up, and it will as age goes up, that block of business needs to be priced accordingly, and that's when we saw these premium rate increases. So
That's unavoidable.
It is.
It's unfortunately, that just is what it is.
Yeah, the other point there too about the age is that individuals below that mark, below that 64, the premiums will never be lower, right? So if you look at these type of products, you're probably never going to get healthier than you are today, right?
Yes,
probably.
this minute.
Right, yeah, not this minute, right?
Right.
I might be a little round around the belly here, but hopefully I'll get a little healthier. But so individuals that are in their 50s, 40s, they're looking at a premium and then it's say, well, I'm going to hold off. I'm going to wait on it. Okay, if you wait 5 years, that premium's really going to increase.
I love that you said that, because that goes into talking about these life insurance. And so I'm going to save that question and let you talk about that. But can you first just tell us basically, like, what is the purpose of life insurance? Who needs it? And is it less costly if you do it sooner?
Yeah. Jim?
So what is life insurance? It's a contract between you and the insurance company for a specific face amount, which would pay out upon your death. And there's all different types, right? There's permanent coverage, there's term coverage. Term coverage will last, depending on the length of term, 10 years, 15, 20, 30-year term. And then we have permanent, and that will last typically for the remainder of your life.
If it's
Why
designed
would someone
properly.
choose a term?
So
because essentially then you're paying for it for 20 years. If you don't die in that 20 years,
So
what do you do?
It can be used, if it's used properly and structured for the right reasons, it can make sense, right? So if maybe you have a mortgage for $250,000 and you have 20 more years left on it, 20-year term, $250,000 would make sense.
Okay.
So it can take care of certain situations like that.
Interesting.
Yeah, really putting in place protections for individuals, for your family, for your children. Term insurance is a vehicle that can be used not only for individuals and their family protection, but also for businesses. Certain business owners will get term insurance or a small policy or a certain period of coverage for individuals that they want to make sure that they're protected for their business.
Nice.
If something happens to that individual that's, maybe a revenue builder or a manager, that company is going to have a big loss if something happens to that individual. So
That's
how are they
me
going to
here.
recoup that? You know what I mean? Well, yeah,
That'd be you,
and I'm going to send that. Don't worry.
So we'll talk to Paul about that.
Pretty sure he
Not
already
myself.
knows.
So you mentioned a few, term and whole. So how do you determine, I know you said business wise, but how would, like, if it was me, how would I determine what is best for me? What does that conversation look like?
And so typically, that's a really good question. Typically, we use a calculator, right? So there's a calculator that it's going to ask you for all your information to put in, any student loan debt, your mortgage debt, your annual income, how many children do you have?
Oh my gosh, let me get underneath the table now.
So it's going to ask you all those questions, and it's going to populate a number at the end of what you need, right?
Okay.
And
That can shock people sometimes too.
It can.
I
So
think it's always more than we think it is.
it is.
100%.
Yep. So the nice part is, though, is it gives you, it's not me saying it, and it's not your financial advisor
Right.
saying it. It's a
This
calculator that's
tried
saying,
and true program
Right.
that's saying,
this is how much you need. And so a lot of people will actually get two policies, right? They're going to get a permanent policy that's going to be a little bit less of a death benefit. Maybe it's $200,000. And then they're going to get term coverage. Term coverage is going to be a lot less expensive than a permanent policy. So the term coverage, while you're young, you have children, you typically need more insurance, right? And so the term coverage is going to provide the coverage that you need for a lot less.
well, okay, so when you put it like that, that makes sense, right? Because you just never know. I could be driving down the street and whoop, there it is.
Whoop, there it is. And
There
that,
it
that
is.
does
Favorite songs. Thank you. We were bumping to that on the way here. A little bit of that in Marky Mark.
Just can't
but
help
if,
it.
If I go freestyle, I'll never stop. Go ahead. I'm sorry.
Well,
continue.
yeah, I was gonna say, yeah, we all want to hear it now. So I like that you mentioned the calculator because that is one of my questions. Like, how do you decide with your family, the cost of living, all those things? So I love that. And so you mentioned that it's death is when it pays out. Now, what kind of different, I don't know how to say it. Like, what are the accidents and things like that? So accidents would be covered. What are some things upon your death that maybe would not allow that to pay out?
Well, I mean, accident and illness, deaths will pay out.
Yeah.
So war, I don't believe would pay out.
Interesting.
Yeah, there's certain things.
Are you going to have that written in your policy?
It actually says it in the policy. It'll say an act
Is that
of
like
God.
getting struck by lightning?
No, I think that's
because
more
that'll
of-
pay out.
I don't. Oh, that's an
out.
interesting. That seems too broad. That just seems like it gives them the reason to be like, act of God not paying out.
Well, and actually, Corey, another good reason to look at a permanent policy would be because we can attach a long-term care rider to it and make it very affordable, right? So that,
Like a bundle?
yeah, kind of like a bundle. We'll call it a bundle.
Yeah, you can
It's a
bundle.
rider on the life insurance policy.
I like that.
Yeah,
We could flow on
bundle
here.
and save.
No, because we got 3D advisors. We don't need her.
Well, I'll
They
do
don't
it. So
have
I'll
it
put on the
anyways.
apron.
They don't.
I'll put on the apron. I'll do it. That's fine. But you did
Apron and wrap.
Yeah, you
Yeah.
did.
It's a new look.
You did touch on one thing that you said. Benefits. That's the death benefit. That's the benefit when they die.
Yes.
In what Jim was, I think, leading into there was that a lot of these permanent type of products also have living benefits as well, which is part of that long-term care need. And he mentioned it earlier, the link benefit products or a life with an LTC rider. So you can have that accumulation in that product. So you'll have that accumulation that is now your vehicle and it has more power behind it because you can use those benefits not just when you die. You can use those benefits, while you're living. So that's again that's big part of the planning process. And a lot of people don't understand how much really goes into the planning. It's not just give you the quote, here's the lowest price, let's go with that, blah blah blah. There's
Well, you really
a ton
want to
of
make
stuff.
it personalized.
100%.
Otherwise, if it's not customized and tailored to your needs, sort of what's the point?
In
Everybody's different. Everybody's
Exactly.
goals for their family upon passing are different.
Yes,
Right.
yes, and that's part of the whole discovery portion of it as well. And our financial advisors do a great job of really getting down to the nitty gritty and understanding their clients, not just throwing something at them that they're I got a sale. We really don't work with individuals like that. We work with people that really do true holistic planning, cover their clients with everything they can. There's a couple of living benefits that we focus on too, and that is part of the long-term care conversation. The reason why is because of the need of the individuals. How many? 10,000 a day for the next 10 years?
That's
Because
insane.
of the individuals, and that ties right into what you guys are looking to protect and help with, and that's why this is such a great partnership. And 100 hours of back office work can go into one client. Like, it's really ridiculous. And that's why our team is such a rock star team, because they make it look easy for all of our financial planners and advisors that we work with. Would you agree?
I agree. They do a great job.
Yeah. It makes it look really easy. They a lot of advisors will call and say, well, this was a great, easy process. And then behind closed doors, we're all pulling our hair out. If you don't believe it, I actually had hair just like Jim
I was
about
gonna
a
say,
week and a
yeah,
half.
maybe I
pass
do
all
believe it.
My calls off to Matt.
Yeah,
now.
Oh, that's
so
He's
smart.
got nothing to lose.
That's
right?
smart. That's real.
I'm gonna lose it up here now.
Oh my gosh, you
absolutely.
guys, that's too much.
I know.
So, with long-term care, can you please explain to our audience what exactly that would cover and how those policies can be different? Because you mentioned a couple of different types of long-term care policies already.
So, and this is where I share a personal story.
I love it.
I hope you don't mind.
Yeah, please.
And
Unless
Jim
it's
and
about
I.
you.
No,
No, this one's not about me.
no, it's not. And Jim and I, we both, just like a lot of people out there, they've experienced this long-term care event. Okay. And that's the generalized LTC, long-term care. That's a generalized. So, but it's really a care event. Okay. So we hear a lot of the sandwich generation. Okay, where you have young kids that you're taking care of, and now your parents are getting older as well, right?
Yep.
So you're kind of sandwiched in between of taking care of the younger children and then taking care of your elderly parents as well. So we've lived this in Chuck and I. Chuck's my brother. Jim's my brother from another. Chuck and I have experienced this with not only our grandmother, who lived with my parents for about a year and a half before she passed, but my father as well. My father was diagnosed with multiple systems atrophy, MSA, and a lot of people have no idea what that is. But essentially, he basically lost all function of his hands, his arms, his legs. He wasn't able to really move around, especially the last about year and a half. Unbeknownst to us, my dad, back when he worked at General Motors, he bought a long-term care policy through his corporation, which was a fantastic thing that we discovered about a year into taking care of him ourselves, going, oh, wow, this is, Dad, you paid for this, why don't you tell us? So that policy allowed us to get somebody to come in on those days that we weren't there, sit with him, make sure that he didn't fall or anything like that, be able to feed him, prepare his meals, things like that.
All those companionship things.
That policy allowed us, because he wasn't able to perform a lot of those activities of daily living, like just basically getting up and dressing himself and things like that. So really it's a protection for the family. You know what I mean? That's really what it is.
Well, that helps him to live out the days how he wants to live them.
Oh, yeah.
Because that is a big thing, and I think a lot of the industries, in our senior industry, they know that. Some people want to go into senior living, and some people want to age in place at home. And unless you have a policy like that that's going to allow you the care that you need in that fashion, or you have family members who are able to take care of you, don't have too much of a choice.
And that's one of the questions that, a lot of people, there's a couple of very easy questions, right? I mean...
Yeah, so when I'm working with an advisor and his clients, the 4 questions that I always kind of lead with and really gets people thinking is, in the event that you have an extended care need, where do you want to receive your care? And most people will say, I want to receive it in my house.
Of course.
Right? And that's normal. And then the second question is, what roles and responsibilities do you want your family members to play in your care, right? And so who's going to be, getting your groceries for you? Who's going to be taking you to the doctor's appointments and things like that?
And there's a lot of doctor's appointments.
There's a lot of doctor's
Yeah,
appointments.
absolutely.
Yeah.
And not even that, but who's going to be taking care of the financial obligations, right? When you no longer can.
Well, and setting up all of those things.
And I'm not saying that insurance does that, but I'm saying, right, what roles do you want
Those
your
are
family
questions
members?
that you,
They need to kind of think through that process. The third question being, do you want your family members to be care coordinators or caregivers? And then the final question is, how do you plan to pay for it? And with that question, you're going to get a couple different answers. You're going to say, well, I have money saved in my retirement account, and I want to use that. Or maybe you'll find out that they have a long-term care insurance policy that they bought from General Motors and they never told anybody about.
Yeah, thanks a lot.
And then the family member finds it a year later into care. Or maybe they're saying to their financial advisor, is that something that you can help me with? Because I don't really know where I want to pull that money from.
Yeah, and that's a good question because they're going to need more of it.
It's very costly. I mean, for individuals, for example, someone to come into the to the house and probably sit with an elderly, make sure they don't fall or prep some things. I mean, it's costly. There's a couple of calculators that we have on our mobile devices now that some of the carriers have been so kind to put out there for free. You really wouldn't believe it's $20, $30, $40 an hour.
I was going to say, I think I seen recently $36 an hour. And while I get it, right, we need to pay those employees a little bit more, and there's insurance and liability and bonding and all kinds of things that go into it. Yeah. I mean, how, think about an 8-hour day.
It's
that's just one day.
It can really accumulate.
It can be $4,000 a week.
Yep.
Yeah, it can get very expensive very quick.
Yeah.
And that's that's at home.
Right.
Just imagine if you're in an actual facility.
Right.
The cost of the facilities is increasing. Obviously, we know why, right? Like you said,
all those reasons,
individuals that need to work there, and the quality of those individuals and the quality of the living experience, and so those can get extremely costly. And again, there are some great tools out there that we have that can kind of generate what it will look like in 5 years, 10 years, 20, 35, something like that, in a certain area as well.
So in your experience, at what age should someone start asking these long-term care questions?
It's
a little different than
really, right? I mean,
but with life insurance, I feel like it's a little different.
Yeah, with life insurance, I mean, you're going to want to start talking about life insurance as soon as that person has reached a job, right? They're out of college now, so they're working and they're able to maybe afford some coverage. With long-term care, it's going to be a little bit later.
Yeah.
But it's not too much later, right? So, I mean, you can start talking to clients. Advisors are starting to have conversations earlier with their clients. And it wasn't always that way. I mean, there were times where, we'd get a request for a 75-year-old that wants long-term care coverage. And we can still help in that area, but it definitely makes more sense to start having the retirement planning conversation and combine that long-term care conversation and really start talking about that when they're much younger.
Now, when you look at life insurance policies and you look at the age, they break them down. If you're 30, it's going to charge you this much. It's your if you're 50 for the same amount of money, it's a little bit more. Sure. Is that true with long-term care insurance as well?
Yeah, and it's really the difference of morbidity and mortality is what they underwrite, the difference between the two, life and long-term care. But again, premiums will be lower definitely when you're younger and healthier on both sides of the table.
Exactly. And the solutions for long-term care can be customized to meet the client's personal situation. So if you said, hey, I'm 50 years old, I don't want to pay for this when I reach, let's say, retirement age,
right.
You can build it so it's designed to be paid up and you're done paying it before retirement, at retirement, whatever you'd like to do. There's options
that's a huge
out there.
Benefit.
Definitely.
I mean, because while you're still working, you have that steady income stream. If you can pay towards a lot of that down, and then when you are retired, if something does happen,
because golf is going to be expensive.
100% it is.
You don't want to take any of those premiums and use it on the golf guy. Just
I don't know about that.
No,
I definitely might want to use a little.
That's a different retirement.
Yeah,
fund.
that's a different retirement.
Jim wants to golf and retire very soon. So very soon.
5 more years.
5 years.
But I think those are interesting questions that I think maybe a lot of people don't know.
Mm-hmm. Yeah, they don't.
Yeah, and I'm sorry, Jim, but
no,
to touch too on the age and when people need to have this conversation, we also see a lot of individuals that there's a lot of uncertainty when it comes to even younger children. Some people think it's real morbid to talk about getting a life insurance policy.
Well, it's the same with estate planning. They don't ever want to talk about it.
They don't want to talk about it, so they think it's too late, right? And then it gets real costly and so on and so forth. But we definitely see newborns have coverage. We see individuals that are under 18 have coverage. There's a lot of questions when it comes to whether or not individuals might be diabetic or they're not sure about these things, these questionable things. So a lot of people look at that. A lot of grandparents look at getting insurance coverage, and now it's might be getting into the weeds a little bit, but generational type of planning where I want to get this type of coverage so my grandkids can go to school, can go to college. And, you know, upon my death, this will be my great gift to them, that they can, you know, have this education on, you know, grandpa and grandma or Mima or Nona or I don't know how many.
Whatever it
yeah,
is.
whatever they
Yeah.
Papa or Jid Day, Sit Day, you know, whatever. I don't know.
A lot of options.
Yeah. So there's, I mean, to really, your head would spin to be able to really look into exactly when, exactly. The straight answer, I guess, would be it's never too early,
No,
right?
it's not.
It's never too early. Unfortunately, sometimes it can be too late. Does that make sense?
It does.
And I like that you brought up that people don't want to necessarily put it out on their children, but I think it's important because, again, when I said, whoop, there it is, that can happen at any time to anyone. And so, and those expenses, final expenses, are more costly than ever. And so having a little bit of protection, I mean, especially depending on where you are financially, trying to manage that can be overwhelming for some families.
Yeah, people really understand, especially if you're out there, you have a financial advisor, you have somebody that you know is doing the proper planning for you. That advisor is definitely going to understand the value of the money and the value of the dollar, and if somebody's generating income in these years, how long do we have in order to make sure that we capitalize on the most out of what they're generating? And they always have a plan for them. Do you want to retire as a millionaire, right? Do you want to retire as a multimillionaire? That's where we're going to get you. Let's get you there. Let's protect everything. Let's make sure that if something comes in a care incident, you know, we have you backed up.
Sign me up.
Actually, I have an application right here on my phone.
Done.
We can do it now because of technology. Yeah.
Oh my gosh, right?
It's true. It is. Unfortunately, there's a lot of focus. Fortunately or unfortunately, there's a lot of focus on technology, and it's really easy to complete what used to be 40 pages of paperwork back in the day. And I say back in the day, about 6 years ago. Back in
Or
the
just
day.
before-
Back in the teens here.
Prior to COVID.
Yeah. Yeah.
You know, now
Yeah.
everything's electronic. Which
It
is
is.
good.
It is. Absolutely.
They, you know, on that note, COVID did some good and some bad.
Yeah.
It definitely accelerated our industry a little bit more.
It did. It pushed the
Updated
insurance
ya?
industry.
Got a
Yeah.
little update.
Yeah.
I mean, some of them they're still trying to catch up. But it's okay.
We
They're
won't
doing-
name names.
Yeah.
They know who they are. No.
Chuck's not even here. That's not nice, you guys.
Poor Chuck.
We haven't made fun of Chuck once, 3 times.
Well,
we haven't.
I understood that, so I thought I would take it upon myself to
There you
just.
Appreciate that.
Yeah, no problem. So you guys talked a lot about being educators for the agents who a lot of our audience would be talking to.
Yeah.
Correct.
So what sort of things do you do? Is that webinars? Are you up teaching classes?
Yep.
How do you do that as an agency?
Yeah, so a lot of it is we work with multiple broker dealers. We train their case
30,
planning.
right? 30
No, those
more
are the
than 30?
insurance companies.
Oh, okay.
So the financial advisors are usually connected to what we call a broker dealer.
Mm-hmm.
So we educate the broker dealers on these topics. We educate the financial advisors on these topics. A lot of times it's done by webinar, or they'll have us come out and present to them, you know, right there as a class.
Yep.
We'll do lunch and learns, right, where we bring advisors in, we educate them, we teach them. And then, you know, I think one of the most important things that we do is when a client comes to an advisor and wants to look at long-term care options, we show them everything that's available, and we break it down
Wow.
by here's how this one works, and we'll do it with the client as well, right? So we'll work together with the advisor and their client.
Yeah.
Explain to them the differences, because there's all these differences between these products. They might look alike, sound alike, but there's little intricacies that make these products just a tad different from each other. And that helps the client really determine what they feel is going to be best for them.
Yeah, and there's nothing better than an educated client. So when clients come to the advisors and they have a set of questions that are prepared, that are ready, right? You know, what's the best option? What about this straight long-term care? What about I've heard about these, you know, hybrid products. What can protect me if I'm going into a home? What's the cost going to be? So, you know, for clients out there, I would say definitely do a little bit of research and make sure that, you know, you have the right financial planner.
I was going to ask you that too. And I do want to mention on your site, you guys do have some like startup questions that you can ask. You have 3 different printouts: estate planning. What are the other 2?
We have. I mean, we have a lot of fact finders. We have.
Yeah.
We have one that would allow us to gather, some basic information just on, like a health questionnaire
Yeah.
almost too.
And people can just print those out. They can visit your site and they can print those out. And I think even just starting there for yourself and just printing those out and looking at those questions and figuring out what's important to you, so then they can come to your agents and say,
Yes.
I found this on 3dadvisorsinc.com.
And I need you to help me.
Yeah.
I need your help.
Exactly.
In part of the education process too is we have, like you mentioned, those 30 plus carrier partners.
Yeah.
We're not going to sit here and say we do it all, we know it all. I think that would be pretty silly. So if we have access to some of the best minds in the business, and that's through our relationships with the carriers, attorneys, estate planning attorneys. We have conversations constantly with that.
Oh, I bet.
Medical underwriters on cases. So if you have, the I got a guy situation, we've seen some very interesting ones, especially some with farmers in Michigan. There was a very interesting one. We can't say that on the air, but everyone at the office will know what it is. But there's always a situation where it's a little bit eye-opening. I can't believe we haven't come across this before. So we definitely have the right partnerships in place to be able to get those questions answered.
I think it's important, from everything that you have both shared today, finding someone who is patient, who wants to spend the time with you to educate you and answer all those questions. Without a doubt, if they aren't trying to do that, then you know that they're probably not for you.
Absolutely.
Correct, yeah. I mean, their job is going to be to guide you through the process, and whether that's the retirement planning process or the long-term care planning process. The long-term care planning process can take a little bit of time. You really need to think through it. It's a different conversation.
It is.
Yeah, very personal, and again, it's
sometimes
the hard
emotional.
questions.
Yeah.
Well, especially, look at, you shared a personal story from you, and so you learn from that, and then that helps you to sort of figure out what you would like for yourself and your family, and so that stirs some things up sometimes.
It does. It gets people thinking, right? And that's really what, those 4 questions that Jim asked, that really gets people thinking, because they might come into the meeting thinking, hey, I know exactly what I want. Then you ask those simple questions, and they're like, all right, we're going to have to do a follow-up meeting. We're not really sure.
Well, it's true, because I think a lot of older people, too, well, they don't want to be a burden on their family. I'm sure you hear that all the time. Right. Want to be a burden on my family.
I do. I want my kids to take care of me.
I've raised you
I'm
this
going
whole
to be a
entire
burden.
time.
You know how many diapers I had to
turn.
change?
Okay.
You little...
Caitlin.
Yeah, Caitlin, Christian, Natalie, you're taking care of me.
No, you won't.
No, you're probably not. Yeah,
no, because his job is to provide education for people. So, in fact, you'll probably be better taken care of.
Suffer as much as they make. No,
He'll have a plan, but the plan, you won't tell him about it
The
until
plan is like
it's
a
going to be
puzzle.
hidden in a drawer.
about a year
Yeah,
later.
you'll
then
have to
he'll
figure it
tell.
out. Yeah. The plan is to make you really wait for the benefit.
Right.
That's right.
On that note, the insurance company, and I won't name the name, but the insurance company that my dad had the policy with, they actually backdated to when we started paying somebody to come in.
Wow.
They were fantastic. So these insurance companies really know how to take care of the clients. Some of them might be a pain, but
that's what I was going to ask you too, because from a therapy perspective, we've had lots of clients who have been on long-term care, and I feel like sometimes they have to fight a little bit.
a lot of the carriers that offer these type of products will have a type of concierge type of service dedicated to that. In our experience, in my experience, I really haven't had too much trouble getting someone the correct reambrsement or backdating something
Yeah,
that hey, when did the care start?
Yeah.
And it was almost, it was about 8 months. So that it wasn't necessarily a shock to me, but it was a very nice surprise. You know what I mean?
Yeah.
Because because that spouse who was probably paying for that care in the meantime, that's a nice little bump that they didn't really quite expect. So that just on that note, I'm sure there are horror stories out there, but if you have somebody that is willing to fight for you, like our team would be, and your financial advisor, your professional, then I'm sure that makes it a little bit easier.
Yeah, so definitely, our audience needs to do their due diligence and really, yeah.
I won't say it.
But definitely do their homework. How about
definitely.
that? Do their homework and think about all of the different changes. We have another podcast that talks about estate planning that really goes hand in hand with this to really start having you create those plans if you have not already. I encourage our listeners to reach out to you guys. 3D Advisors does do more than long-term care and life insurance. Do you want to just briefly touch on that really quick?
Yeah, so there's a couple things that we do. Those are the product lines: life insurance, long-term care, annuities, right? So those are indexed annuities and fixed annuities, and disability insurance as well. But we will do reviews for you guys. We'll help. We'll do policy reviews. Make sure that if you do have coverage, that it's adequate and that it's working the way it's supposed to be working. And then
That's a great point.
That is a huge
Yeah.
point.
It's a great point. Even on an annuity or a life insurance policy for something that's been enforced, you should definitely have a policy review done every few years.
Yeah.
I think 5.
3 to 5 years.
Yeah, 3 to 5 years is probably a good time frame. Most of the time, what we find out is that really they haven't had a review
At
in a
all.
long time
I
or
bet.
ever. So yeah,
Yeah.
definitely. If you haven't and you have a policy, it's probably time for a review.
That's also available on the website.
I appreciate you guys bringing that up because that's just the same thing with your estate plan, right? And if you update your policies here with you guys, these types of policies, then you absolutely should update then your estate plan based on what you have decided on that review.
Correct. Definitely.
Yeah, most of these policies obviously held within the estate. If you have the proper estate planning people on your side, then they're gonna coordinate those type of benefits as well. So.
Yeah, so I definitely encourage our listeners to visit 3dadvisorsinc.com, or you can call 800-758-6913.
785.
785.
Yes.
That's what it says on this paper.
I messed it up then. 800-785-6913.
We'll put that on the screen. If you have any questions, do you guys want to share your emails as well? They can reach out to you. You prefer phone number?
Yeah, they can email us. My email address is jim@3D, so the number 3, the letter D, advisorsinc.com. And Matt is
Same as mine, Matt,
at
at
3dadvisorsinc.com.
And we'll give Chuck some love too. Chuck is clearly it's Chuck at 3dadvisorsinc.com.
And if you have any questions for us at the Senior Podcast Show, you can reach me at kl@theseniormovers.com, or you can call what is it? I can't do numbers today. 586-204-8500. Don't ask me to add up anything today.
Absolutely
As a
not.
matter of fact, on that note, is there anything else, any last bits or tips that you would like to share with our audience?
I think that if you're working with an advisor, or even if you're not working with an advisor and you want to be introduced to one, that's something that we can help, right? So we can put you in touch with an advisor that is going to do that holistic type of planning. They will look over and review your policies for you and help you have peace of mind. Another thing I would say is that don't hesitate to ask any questions when it comes to any of the topics that we discussed today. That's what we're here for. That's what we do all day long, and we're happy to do it for you as well.
Absolutely. Ditto.
Aw.
Ghost. Patrick Swayze.
Hashtag Patrick Swayze.
Hashtag rest in peace, Patrick.
Thank you for joining me on the Senior Podcast Show. I appreciate it. These fellas will be back to give us some more education and knowledge so that we can better help seniors and their families and all who care for them. Again, if you have questions, reach out to them. Their information is listed in the description down below. And thank you for joining us on the Senior Podcast Show.
Thank you.
Thank you.